Hello, everybody. Gbenga Olatunji here. We are looking at the requirements from directors after completion of financial statements. That is, after they've prepared the annual accounts and audited it. What are other requirements as to law, requirements as per financial statements that are leading on the directors and the board of directors to do? And as we are going into financial reporting now, it's important for me to encourage us, people that have interest in financial accounting, financial reporting, and corporate reporting, whether for business or for studentship. The theoretical aspect of our discussion of the syllabus must not be neglected for anything, because oftentimes surprises do come from the institute about the examination, and courses sometimes that are ordinarily known to be for calculation could come with a load of theories, theoretical and narrative questioning, and by that time students oftentimes are stranded because they prepare much about calculation aspect of the study and neglected the theoretical aspects. So we are dealing with the theoretical aspects now of financial reporting, financial accounting, corporate reporting. What are the things that the directors are expected to do after they've completed work on the financial statements? We had earlier worked on similar topics in which we deal with requirements to keep accounting records, and we've discussed about where to keep the record, who is to keep the record, the duration to keep the record, whose duty it is to prepare even the record being kept, and many more in details. So if you are just joining us, please look up to that particular video and check it on so that we can be on the same page. And please don't forget to subscribe to the channel, James Associates. We are value to life, we are value to your business. So we move on into the requirement from the directors after they must have prepared and audited the financial statement. It is important, and we are going to be looking at it in this dimension: the signing of the report, who are to sign, those that must receive the financial record. We are going to look at the timing of financial accounting presentation. We are also going to look at the director's obligation to registrar of company. As registrar of company, they are actually representing the government side of things. Now, on signing of the financial statements, it is important that the directors should sign on behalf of the board. At least two representatives of the board of directors must be selected to sign the audited financials. And now, Financial Reporting Council also involved that the CFO, that is the Chief Financial Officer, should be included. So it's possible in some accounts now that we have like 3 executives signing it. Why did FRC, Financial Reporting Council, mandate that even the chief accountant or chief financial officer to sign it? Don't forget that they legally, it is the responsibility of the directors to prepare the accounts, whether they are financially inclined or not. Don't forget that it is the CFO, the chief financial officer, that is actually in the doing of the financial and the making of the financial statement being presented now. So it is important before the Directors own the responsibility and sign off, but now it is mandated that the person that is in charge of preparing it too, even though the directors are not still yet exonerated from the responsibility of financial preparation, but the CFO too should sign. So you can have now three executives signing a particular account. It is still possible. So the directors are to sign the financials, and having signed it, let us quickly link it together to the responsibility of the directors to the commission, that is registrar of business in any country. So they must send one of the copies of the audited financial statement to the commission. The person entitled to receive the financial statements, who are the people that are expected to be given the financial statement to? Primarily, the shareholders must have it. The debenture holders, that is those that the organization is legally owing, must have it, and some other important stakeholders, like we mentioned, the commission, registrar of business, must have copy of the financial statements. So every member of the company, now we are talking about the shareholders, must have a copy of the financial statement. Every holder of company's debenture, all person other than members and debenture holder, being person so entitled, like the commission, the taxman, and the like, must have it. Directors' duty to lay and deliver financial statements. So this is now talking about the presentation of the financial statements to the house. Within the first 18 months after incorporation, if the organization is just starting off business, the first year and a half of business operation, it is expected of the business to prepare the financials and to present it to the members of the organization, in which these shareholders are major stakeholders in form of membership. The directors must lay the financial statement before the company in a general meeting. So they need to order for a general meeting and circulate the information to necessary people that to be there at least once a year, and not exceeding 9 months after the year end. Let us look at it critically. Now, if an organization has always been a going concern, after the calendar year, accounting calendar year, not exceeding 9 months after, financials must be sent and must be presented. In some industries, it's not even up to that. 3 months after, the directors, the board must ensure that financials are presented to the house, but legally required the requirements not exceeding 9 months. All organization, especially PLC, public interest organization, must present their accounts to the stakeholders. The directors must deliver with the annual returns to the commission. Also, we started with this commission, that is registrar of company, and other agencies that necessarily must receive, depending on the country you are listening to me to. The company, by board of the director, must ensure that they receive copy of the financials from the organization. The right to obtain copies of the financial statement. All shareholders, they all have rights to receive financial statements. It doesn't really matter whether we are talking about shareholders that are having just 1 unit of share, or we are having those that are in multitude of million holding of shares in units. Every shareholder must have a copy of the financials from the organization. As we encourage everybody not to joke with the narrative aspect of our business, of our education and syllabus, don't forget also we encourage you to subscribe to GJM's Associate channel, like, comment if you have enjoyed what you've heard so far, share to other people. And one of the way you can easily encourage us to share and reach to other is by you subscribing, so that the network around you too can be easily accessed by you subscribing to the channel. Join us next as we look at the advanced audits and assurance, in which we are going to be revising on audit finalization and reporting. We are going to be revising deep revision on audits, finalization, and reporting. Gbenga Olatunji from GJM's Associate channel will be signing off. We are value to life. We are value to your business.